The union budget attempts at presenting a growth agenda which leads to at least 7% growth with a fiscal deficit. And I want to just show you the fiscal deficit that the government is really looking at in this budget. They're hoping that they'll be able to keep the fiscal deficit at about 4.3%. 4.4 is what the finance minister was able to deliver on in fiscal year 26. The estimate for fiscal year 27 is 4.3%. Dr. Roy, you've been now having an opportunity to read the budget fine print. Is that really where you think logically we should end up next year? Or should the government have been more aggressive in trying to curtail the fiscal deficit further?
No, there's no point doing that as long as private investment doesn't pick up. Because already private investment is low. You can see that people are criticizing the government. It's true for cutting expenditures across the board to maintain that very good number as a percentage of GDP. Revenue is not picking up. Disinvestment is a miss. So in those circumstances, I think it's very credible. She's even sent that signal. I would have forgiven 4.4. 4.4 to 4.3 is good. And then when the economy picks up, if and when revenue picks up, if they can get their act together on disinvestment, that is the time to try and achieve a more ambitious fiscal deficit target. But I think we're in a very good spot here macroeconomically.
You know, the other thing that is interesting is the fact that on defense, the capital expenditure is expected to go up by about 21%. So they're trying to increase, one of the charges is that it hasn't gone up enough. So from 5.7 lakh crores now projected to go up to about 5.9 lakh crores. But within that, the percentage of spend on capital expenditure going up about 21% from the last budget. Harsh, your sense of the renewed emphasis and the signal that's being sent by trying, especially on the back of Operation Sindoor, going out and purchasing high quality weapons and spending money over there.
So I think not just Operation Sindoor, of course, that's very important, but the broader geopolitical context, Donald Trump in Greenland, what's happening in Ukraine, Russia, Gaza, Palestine. I think there's also a sense of realization now that indigenization is being gradually pushed. Every rupee of money spent on defense capex is not just insurance, it is also investment. It kind of crowds in technological civilian spillovers. So I think there is an early stage of building a defense industrial complex. Can we give more contracts to Indian private MSMEs in defense? So this is not seen as insurance premium anymore. It is seen as investment in India's core defense industrialization. So the way the space capex spills over and has multiple dual strategic uses with missiles, the way we've done it in nuclear for nuclear civilian and nuclear weapons usage. Similarly, more broadly, defense expenditure is now being realized. So General Raj Shukla often speaks about civilian military fusion. So I think that is also the underlying context of the government being a bit more comfortable spending this amount of money. And if you're going to be an independent pole, you can't be an independent pole just by talking about it. You have to walk the talk with a bigger stick, so to speak.
Okay, and the focus, Rumki, on emerging technologies and the fact that it takes time, it's not something which happens immediately. To what extent has our semiconductor mission succeeded, and your sense of the new rare earth corridor that is being created, the tax holidays, for example, for data centers, and the efficacy these policies are likely to have?
See, in a time where the goods manufacturing goods is becoming a challenge, I think it's the services sector where where the growth momentum lies the most. And here, the semiconductor, I think it's to move up the value chain. And also the fact that rare earth, which is where we are challenged quite a lot, because right now we are focusing on mining.
Let me get Mr. Chidambaram's take
yeah.
on this. Former Finance Minister Mr. Chidambaram joins us. It's always interesting to hear what he has to say about the budget. Mr. Chidambaram, welcome. Can you hear me?
Why don't you?
Mr. Chidambaram, do you hear me? Mr. Chidambaram, can you hear me?
I can hear you.
Okay, let's just do this on my phone, sir. So I'm going to ask you the question, you just respond, and that I think is best. You've had an opportunity to look at some of the budget numbers. Let's start by your overall assessment of the vision that's been laid out by Finance Minister Sitharaman in her 9th budget.
What vision? I don't think the Finance Minister has addressed any of the major challenges pointed out in the economic survey. Nor does this budget speech or the budget numbers spell out any economic strategy or any economic statesmanship. There are major challenges facing the globe, facing India. She has not mentioned any of those challenges, nor has she addressed them. Why do you call it a vision?
Okay, let's take a look at some of what she is trying to do. Create, for example, tax holidays for those investing in cloud services which lead to data centers. Do you think that leads to more investments being made in data centers in India? How effective is that tax holiday till 2047 likely to be, Mr. Chidambaram?
Please understand the basic issue. The basic issue is not investment coming into cloud services. We are talking about raising manufacturing, which is stuck at 15, and raising the gross fixed capital investment, which is stuck at 30%. FDI is stalled. FDI must come into manufacturing, must come into services, must come into agriculture. And then we are talking about private sector extremely reluctant to invest in India. We are talking about those investments. Those are the investments that will give a direction to the economy, not this stray investment in cloud services. How are 98% of the people concerned with cloud services? They may be in a remote fashion or in an indirect fashion, but we are talking about investment in manufacturing, services, and agriculture.
One of the big announcements that's been made over the past few days is the India-EU trade deal, and a lot of hope being expressed that this gives Indian manufacturers the opportunity to export to the vast European Union markets. How much of an achievement do you see that as being, and to what extent do you think this will help Indian exporters, Mrs. Chidambaram?
I agree that a free trade agreement with the European Union is a big step. But we have been pleading for several months and years that it was a mistake not to sign the earlier two multilateral trade agreements or to withdraw from one of them. They did not sign one, although the window was open for a year. They withdrew from RCEP after signing it. So that was wrong. So I welcome the India's agreement with the European Union. But I don't agree with Mr. Piyush Goyal that it will be implemented this year. There are several steps to be crossed before the FTA will come into effect. Remember, last year, Mr. Goyal said that the India-US FTA will be concluded in 2025. We are already in 2026 and there's no sign of conclusion. Equally, he is
you would also
optimistic.
accept that that's hardly Piyush Goyal or Prime Minister Modi's fault. That is playing itself out in a very public fashion, with a lot of the levers or the curveballs being thrown being way beyond their control.
Why are you springing to the defense of Mr. Goyal? I'm only pointing out.
Questions. I'm defending no one. I'm asking a question.
You are not asking the question. You are not allowing me to complete the other answer. So
Okay, please go on.
How do I have faith in Mr. Goyal that the agreement with the European Union will come into effect this year? I think it has to go through several steps. And whether those steps will be completed this year, I don't know. But whenever it is concluded, I have already welcomed the India-EU FTA agreement.
One of the points you make is that the finance minister doesn't address the challenge of the global macroeconomic challenges and uncertainty, which are reflected in the economic survey, but not in the speech that she made. The other way of looking at it is that instead of signaling panic or alarm or, causing anxiety, the government is doing what it can do. For example, merchandise exports have still gone up despite the threat, despite the tariffs that have been imposed. So the government behind the scenes doing what can be done, and the finance minister not wanting to publicly signal anxiety and create panic.
What are you saying? The left hand spreads panic and the right hand calms the situation, is it? Why is the chief economic advisor mentioning these challenges in the economic survey? The chief economic advisor is a part of the Ministry of Finance. It is the economics division. Of course, he has a certain degree of autonomy. But within that autonomy, he has spelt out challenges. He has listed the challenges. The finance minister must mention those challenges and then address them and calm the situation. She can't ignore those challenges. Those are, I've listed in my statement 10 challenges, and I orally observed in my press conference the 11th challenge. She should refer to them and address them. Addressing them is not succumbing to panic.
The government's also trying hard to create a domestic manufacturing ecosystem. For example, in mobile phones, electronics, they're citing the manufacturing that's happening now, alluding to the time when you were finance minister, the UPA was in government, saying this should have been done much earlier. They're now trying to do it in semiconductors, building also a rare earth corridor, saying that this is India having to play catch up now because previous governments weren't alert, like the Chinese were in the matter of rare earths, decades going back. India is having to catch up because earlier governments didn't do this job. How do you respond to that, Mr. Chidambaram?
A government 10 years later will say this government did not do its job. Don't go back to I told you so or this was your record. We are talking about a 12-year government. The past of this government is this government. The past of 2026 is 2016. Therefore, don't go back to the remote past. We are talking about a government which has been in office for 12 years. And that government admits that manufacturing is stuck at 15%. I want specific steps how the manufacturing can be raised from 15% of GDP to a higher percentage. Now, where is the answer for that? I don't care whether you do it in this manufacturing sector or that manufacturing sector. But manufacturing, no country has become prosperous and affluent without increasing its share of manufacturing to a reasonable level. But no country has become affluent with a manufacturing at 15%.
Many analysts are calling this, Mr. Chidambaram, a Goldilocks period for the Indian economy. World-beating growth and low inflation. How do you reflect on the description of this period being a Goldilocks period for the economy? You got very high growth in a global context relative to what's happening in other peer economies, and you've got very low wholesale and consumer inflation.
I don't believe the inflation numbers. I don't believe the growth numbers. Several commentators have criticized the numbers. We are not disagreed that there is growth. Whether the growth is 5.5% or 6% or 6.5%, it is growth. I concede that. There is growth. After all, if millions of people work on the farms, work on factories, work on small shops, the GDP will grow. Unless all of them idle and sit at home, the GDP will grow. But I don't believe that we are growing at 7%, 7.5%, or 8%, and that the inflation is only less than 1% or close to 1%. I don't believe that. I ask this question. Look at household bills. Look at education costs. Look at medical care costs. Look at transportation costs. You still believe that inflation is less than 1%? I mean, why is the BJP campaigning in Tamil Nadu, carrying grocery bills to house and say, ignoring what they are saying in Delhi, why are they saying inflation is high in Tamil Nadu? How can inflation be high in Tamil Nadu and low in the rest of the country? Therefore, leave out those numbers. Direct the question to what you are doing to increase manufacturing from 15% to 18% to 20%. Number one. Number two, what are you doing to increase jobs? You say unemployment. I wrote a column on unemployment also. Are you agreeing that there is rampant unemployment? CMI data every day and every week shows youth unemployment is between 15% and 25%. And every job that is advertised, thousands and lakhs of people apply. Therefore, address those issues. I'm not saying you should not address rare earths issue, you should not address cloud issue. You address them. I have no quarrel, but address the fundamental issues which are enumerated in the economic survey.
Mr. Chidambaram, for joining us with your perspective on the budget. Thank you very much. I'm going to use some of the points that you made to get Harsh Gupta to respond, to the point that Mr. Chidambaram makes about the need to increase manufacturing from 15 to 18 to 20. He feels the budget doesn't adequately tackle that challenge.
You know, Rahul, I was slightly taken aback by the former finance minister speaking that we should have joined RCEP. Again, the reason the India-EU FTA is so welcome is because the two economies are very complementary. Had India joined RCEP, one of the reasons, 1991 liberalization actually hid a lot of issues with our manufacturing weakness. We had lower value add in the year 2000 in electronics than in the year 1990. Airtel earlier used to be a phone hardware manufacturer before it went into telecom. The entire manufacturing space of India got wiped out partially because of WTO's ITA when consumer electronics basically went to zero tariffs in 3 or 4 years. We are actually winning back that lost ground. So by using some heterodox policies, first some tariffs, now PLIs, now EC, the electronic components, ECMS schemes, now ISM 2.0. So the idea that unilateral free trade would have led to a manufacturing renaissance in India is a fantasy story. It has not worked out anywhere in the world.
The deluge of Chinese goods in India, Prasenjit.
No, you see, I think that it is so unfair to pick up on. You may have your opinion. I think he actually was not given an opportunity to elaborate on what he meant.
No, he mentioned RCEP.
Of course, he mentioned it. He said that they shouldn't have walked out of the deal after signing it. So the government should also explain why they signed it in the first place.
No, they did not sign it.
Whatever, they went in to a large extent and then they changed their mind. Anyway, my point is, let us not make Mr. Chidambaram's intervention only about this RCEP thing. It is a side show.
It's not about Mr. Chidambaram. The point is,
I think he has summarized very succinctly what the economic survey pointed out. So he is not making a point, just out of the blue. And it is something which we have been discussing since morning.
I'm speaking about that manufacturing only.
First of all, I don't think that anybody will disagree with the questions that Mr. Chidambaram has posed.
I'll just finish my point.
What are the challenges
I agree with the
challenges.
I agree with the challenges.
Whether the budget does enough to
I agree with the challenges. I'm just taking a slightly longer horizon, not just 1 year. The reality is unilateral free trade leading to manufacturing renaissance has not happened anywhere in the world. Not in Japan, not in South Korea, not in Hamilton's America, not in Germany in the late 19th century. This always import substitution and export promotion always go together.
No. So let me put that...
So that kind of nuanced industrial trade policy where we finally get PLI, some moderate tariffs, removing inverted duty structures, that's not as easy as putting on a bumper sticker. But joining RCEP would have been the very opposite of getting that manufacturing right.
But the point that Mr. Chidambaram makes, and I want Syed Zafar Islam to respond to it, that there is the question of all the global uncertainty, the tariffs that have been imposed in India are not addressed at all by the finance minister in this budget. It almost seems to have been made in a vacuum which disregards or ignores everything that's happening globally. And the likes of Mr. Chidambaram would have wanted that to be dealt with and tackled head on. How do you respond to this critique from the opposition? Zafar Islam.
See, Mr. Chidambaram has a responsibility towards his party to criticize the government, incumbent government, and this is what he did. But he has to also see what he did when he was the finance minister and how he had handled the economy. Today, I would say very candidly that the Honorable Prime Minister and the finance minister has taken a decision that no more freebies, no more populist budget. They have thrown out of this concept of populist budget. And they have actually presented a very matured economy budget where the focus is
अभी आसाम में इलेक्शन होगा वहां पे आप फिर 10,000 रुपए 12,000 रुपए दोगे फिर बोलोगे freebies नहीं है. So let the election today. I know it's budget day, but let election season start and then you may change your mind on some of this.
No, but you have to see on Rahul that everybody was expecting that there are 5 election states and there will be some announcement. But this budget is for the nation, for building the nation, and that is what I'm saying, that they have digressed from the earlier concept which Mr. Chidambaram was talking about, that they have always created either havoc or they have delivered a populist budget. But this budget is definitely, people will understand that this budget is for nation building. This is a long-term budget aligning with the Viksit Bharat vision what the Honorable Prime Minister has. They have focused on manufacturing. They have focused on SMEs, MSMEs. They have focused on important critical minerals, rare earth minerals, where the supply chains, everything what needs to be addressed had been addressed, because that is why Indian economy is showing resilience compared to many other economies. When Mr. Chidambaram says that the numbers,
not that anybody's told me anything, but my take on it, for what it is worth, is that the government thinks it's politically stable and not under pressure at the moment. If it were, there would have been lots of announcements about the election-bound states. They don't feel the pressure on the back of Haryana, Maharashtra, and Bihar. They don't feel the immediate pressure. Maybe that will change closer to the election, but right now they're not feeling.
Describe it.
10 seconds, Rahul, 10 seconds.
And that is precisely what I am saying, that this government is showing complacency. And politically also, I think it can be argued that the BJP, given these 5 elections, I don't think they are looking to get much electoral dividends in these elections anyway.
Okay, now that's a political argument.
Yeah, but that is what he was talking. So he is making a political argument.
You know how much
The questions.
We discuss elections when we are discussing elections.
The questions had nothing to do with elections. What Mr. Chidambaram said, you should answer. What has this budget concretely done about manufacturing, about jobs, and about addressing the global uncertainty being
taking
created
manufacturing in
through this
India from
weaponization
15
of
to
tariff?
18 to 20%. Chidambaram's argument that the budget doesn't adequately answer the question of enhancing manufacturing. Let Syed Zafar Islam respond to that.
See, prior to that, let me also the concern which has been expressed by Mr. Chidambaram, I would like to answer that as well. He was talking about that the GDP number is something he is not, he doesn't accept those GDP numbers. But let me remind him that during his tenure as a finance minister, whatever number has been presented to the global multilateral institutions like World Bank and other multilateral institutions was accepted. Likewise, it is accepted today. They could never, because the economy was in bad shape, all the macro stability was not there, missing all the data at that point in time was suggesting that the economy is really fragile and not performing. And that is why they could never go for rating upgrade. The rating agencies, they met several times. I know as a banker that how much we have supported at that time as a banker. Gave them enough number of data. And many of the bankers deputed their people to support the government to at least credit rating can be enhanced for the country. But they could never achieve because fundamentally the economy was not doing well at that time. Today, we can say with conviction that the economy is showing resilience. Despite global headwinds, economy is showing resilience and it is growing. And the rating upgrade is a testimony
that's the
that
point
the
I want to
economy
build on. That's an important
right
point,
track.
Rumki Majumdar. The fact that despite all the global turbulence, India still ends up at 7.4%. In the face of these tariffs, in the face of the uncertainty, that's not if everybody leaves their political biases aside, that's not a bad performance from any stretch of imagination.
Absolutely not.
In a terrible year for the world.
Absolutely not. And I'll just take one step behind to talk about the manufacturing. See, I agree that the share of manufacturing has stagnated. But what we are missing is that we have moved up the value chain. 5 years back, we didn't have semiconductors, we didn't have machineries and electricals being exported. We are doing that, right? So it's not just the share; it's the portfolio of manufacturing which has shifted. So let's at least appreciate the fact that we have moved, and the fact that the economic parameters have improved, as you rightly said, Goldilocks movement, growth at 8% in the fiscal year. Nobody expected. None of even
No, but how do you respond to Chidambaram's point that I don't believe these inflation numbers?
Very quickly
Inflation number, yes, I agree that overall inflation seems to be much lower. The core, by the way, core inflation is still above 4 and it's been rising. But now with the weightages,
let me show on our dashboard
yes, the
inflation
weightages
numbers and then get Harsh Madhusudan Gupta
Yes.
to respond.
and
to
I
this
think
point.
a lot would change further with the revisions of the CPI happening on 12th. So most likely,
numbers are linked.
no, of course.
Because if that is, I think that what Rahul.
Those are the consumer price index inflation numbers. Monthly inflation at 1.3 for consumer price index and the wholesale price index
Yeah,
as
this
well.
is where the real problem lies. Look at this, the volatility in this. See, the problem, Rahul, let me just give me a minute just to
No,
explain
now
this.
you're hijacking, you're not letting poor Harsh speak.
No.
You made the point about
Harsh,
not believing inflation numbers.
there's
Let him respond.
Yeah, of
I
course.
I just want to say
Ajay, let him speak first. I'll speak
the
after.
same CPI number a year ago was 6% something. The same CPI number is around 1%. So, if we believed the numbers a year ago, we should be kind enough to believe the numbers today. On the manufacturing share, there's a June 2024 article by Bishwanath Golder in EPW, which says that if you use a double deflator method, which we will, by the way, start using from 27th February, so it's not a hypothetical, the manufacturing share in Indian GDP is significantly higher than 15%. Now, that may or may not be the case. You'll find out on 27th February.
No, but the comparison has to be apple to apple. No, comparison can't be apple to orange.
I'm simply saying that right now on the inflation number, if you do apple to apple, the same numbers last year were very
That's a
high.
fair point.
And right now they are low. Going forward, both GDP and CPI numbers within the February month itself are being rebased. So again, there's
I
no
want
point.
to get Ratin Roy to come back in and respond to the concern around the validity and the sanctity of the inflation and growth numbers, the concerns which were raised.
I don't think I'm concerned about the sanctity of these numbers.
Sure.
In the sense that if there's some, it's the same thing you were saying. If the numbers are not sort of
Correct.
How do I put it, sort of sanctified today, then they were not sanctified last year and the year before that and the year before
That's
that.
a very good point. I want to get Rajiv Gowda to respond to it. Professor Gowda, the opposition says we don't believe your growth and inflation numbers. The likes of Ratin Roy, Madhusudan Gupta make a very important point. You can't say the inflation when it was 6% was true, now when it is 1% is not. It can't be chit bhi meri, pat bhi meri, that's not how it can work. And therefore the opposition needs to look at the numbers and respect them and sanctify them for the way they are.
So all these numbers are going to get changed in the next few weeks. So we're going to see inflation calculated differently. You're going to see a new series for the GDP. So in that sense, this whole discussion is somewhat moot. No, we're basically going along with the fact that we acknowledge that the government says it's the fastest growing economy, 7.5%, whatever. But the point is we're still 2% below what we need to be growing at for over a sustained period of a couple of decades if you want to encash our demographic dividend, if you want to reach a higher level of per capita income. So that is the fact. Instead of being triumphant and self-congratulatory, as Zafar and his colleagues tend to be, it's important to actually think about how much of an underperformance this is, right? And that's really costing the futures of large numbers of Indians.
No, why do you call it underperformance? Given all the global uncertainty, the tariff sledgehammer that Trump flung our way, the uncertainty that he's unleashed in the global markets, ending up at 7.4% in that global macroeconomic environment is not an underwhelming performance, Professor Gowda.
I am sorry. This is not new. This has been going on for many years. And, all you hear is talk about fastest growing economy, not what we should be achieving. And by the way, there is tremendous potential for much more growth in the economy itself. It's just not being tapped. Now, we are...
Rahul, can I just come in?
Talk about global headwinds. The rupee is falling. And as a result, you see that dollar-denominated returns are practically nothing. As a result, more people are moving money out of India.
Okay,
Instead,
Zafar Islam
we
has
need
been
to
a
turn this
banker
around.
and tracked investments very closely. The fact that you've increased taxation on STT and you've got FDI, net FDI, which is negative, and you've got foreign portfolio investment again, and I want to show that to our viewers as well, which again is negative. And therefore, the concern that is raised is that the budget doesn't adequately answer those concerns. Zafar Islam, you want to respond to that?
Well, see, as far as STT is concerned, this is not on cash market, it is only on FNO. And that is also perhaps maybe the data which suggests that 90% of the people, which is the data which has been published by NSE, that 90% of the people actually playing in the FNO market is losing money. And I think it is important for the government to take some measures which is a deterrent for people to participate in FNO market, which is something which is not working for the people. And many common man on the street is actually losing money FNO market, and that is something I personally feel will work as a deterrent.
Let them lose money, let them learn their lesson. These are adults who are investing. If they burn their fingers a few times, they'll learn their lesson. Why is the government trying to pay nanny?
No, Rahul, you have to do a proper analysis of those data. Who are those people who are actually losing money? It is individual, very small investment. They are making in FNO and they are losing money. So people who are actually have money, they could have potentially invested in cash market and hold it because there is no defined maturity period for that. But in this FNO market, every month, every day there's a volatility and you lose money. That's why people need to be away from this market with small investor, and that is something which will work as a deterrent for the small investor. But the institutional investor is something which they do based on research. They will continue to invest, and it's a small fraction of STT will not impact their investment decision. Having said that, yes, the FIS outflow is there. The FDI is something which is, even though the gross FDI is a number which needs to be concern needs to be addressed. And I'm sure that all the decision which has been taken today, which perhaps a very matured budget will definitely lend a lot of comfort to the global investor, and they will continue to invest in India because these are all temporary.
Let me get Ratin Roy's take on it. Is there anything for global investors to be enthused by, to look at investing in the Indian economy more than they were in the past few months?
More than yesterday, no. Nothing. Because this budget is not speaking even an incremental way to any global investor who wants to come. And India has strengths. I'm not saying that we don't. And we can talk to those strengths. But if you're asking whether this budget offers anything, maybe those two long-term tax holidays are exotic enough to get.
Can I address this question?
But in terms of the macro, I do not think global investors will react either negatively or positively to this budget. It shows a struggling government, with a very limited amount of resources.
Rahul, can I just address this concern?
It shows certain improvements. Let me finish, please. It shows certain improvements in the, architecture of the tax policy, but that's an ongoing thing. And finally, it also shows that we are thinking very actively about tomorrow's sunrise industries. These will, I think, get analysts to look at India a little more carefully. The investment decision will require more work.
Okay.
But even the investment destinations
just 10 seconds.
become much more wide. In fact, now the focus is on strategic sectors. They are kind of telling that yes, these are the sectors where we can invest. So they're kind of they're bringing
people I studied with our investment bankers. They would look at, for example, the depreciation of the dollar, the fact that returns from India get them lesser when they take them back to New York or London or Singapore or Hong Kong, and the fact that their concerns on long-term capital gains haven't been addressed. And therefore, Zafar Islam, and you understand, I don't know what you'll say on air, but you understand very well that is not enough for them, given the fact that we hardly have any AI play in terms of opportunities in the public markets to invest in AI stocks. There isn't that much, given what's happening globally, for those foreign investors to come and invest in the Indian markets.
See, there are two things which I would like to address here. First, that you were discussing whether they will see differently this budget, the global investor. I'm sure they will. I disagree with the gentleman who just said that they will not, that there is no difference. Every year, if you see historically, if you just do a back testing, you will realize that India, most of the time, the government was managing crisis. Always, in any budget speech, it is primarily focuses crisis management. We are out of this. Thanks to the Honorable Prime Minister's vision and the decision taken in last 11 years, we are out of that crisis. Today, we are in a strong economy, and we are taking a decision which actually has shown the way for growth in future. That will lend a lot of comfort for global investors who want to who have growth capital. They would like to put in a country where there is a growth momentum, there is a potential for growth, and then they will have a multiplier effect over a period of time.
Talking up
Having
their
said
spirits,
that,
but they have to
one
feel
concern-
the same.
Exactly, and it
They have
doesn't
to
get
feel this
reflected in
way,
their actions.
And unlike
One thing which I would
voters,
say, one
they
thing
vote with their
I would
money.
say-
They vote with
They
their
vote
money.
with their money, and the
I would
money
say
is
that-
speaking very clearly. Harsh Madhusudan Gupta, we need foreign investment, net FDI, and foreign portfolio investment, which is a key lever. Otherwise, the markets will remain range bound. It's only when, apart from everything that our domestic institutions are doing, mutual fund money is doing, retail investors are doing, without that, you're not really growing. And they're seeing the absence, for example, of an AI play and the depreciation of the dollar. And as Dr. Roy says, nothing's really happened right now to change any of those circumstances.
Rahul, just give me a bit. I'll explain this because this has come in multiple questions. You're absolutely right. There is no direct AI play in Indian public markets. It's been an issue compared to North Asia and compared to the US itself. Of course, one of the things that happened in the budget is to allow more tax-free investments in the digital server space. See, on the rupee, it's very important to understand, a slightly technical point, the PPP conversion rate of the rupee for the last decade has been around 20 rupees. What it means is the spending power of 20 rupees in India, as per World Bank, is roughly the spending power of $1 in the US. The market exchange rate has gone from 70 to 90. I'm just approximating. So basically, you can say the multiplier has gone from 3.5 to 4.5. That generally happens in a strong dollar cycle. The last time the dollar was in a weak cycle was 03 to 08. You'll remember the rupee went from 50 to 40, despite Indian inflation being much higher. Now, last year, January 2025 to January 2026, emerging markets, MSCI EM has given 40% dollar returns.
You can't throw MSCI EM type jargon without explaining what you're trying to say.
Okay, let me just say, emerging market stocks overall in dollar returns have given 40% returns over the last 1 year.
Sure.
Not India is the one outlier, but as soon as you take a 5-year, 3-year, 10-year view, India has massively outperformed all emerging market stocks. So my only point is a lot of this discussion is because of recency bias. So the Indian PE ratio compared to emerging markets in September 2024 peaked out at 2 times. Right
News channels have recency bias baked into their DNA. And that's just the reality.
You should also
right now it's 1.4 times.
Have my say.
My only point is that the rupee going forward, completely from an analyst's point of view, has reached the limits of its fundamental undervaluation. Because the emerging markets have started to turn around, most likely India joins the EM party as opposed to breaks the EM party. This budget, I agree with Dr. Roy, does not necessarily move the needle just by itself. It just continues the fiscal, stable kind of thing that we come to expect from the budget. But Indian fundamentals at large are very stable.
Roy, the fact that the point that he's making that the rupee is depreciated as much is logical and further depreciation is unlikely?
No, you can always argue that.
I don't disagree. I think it's impossible to predict these things. What I do know is why we would like the rupee to be. And I would say, given our current account deficit, I would like the rupee to depreciate by 6%.
Further?
Further. It's going to depreciate every year. If your CAD is going to be at 1, your rupee is going to depreciate between 5 and 6. There is nothing, there is no way you can get out of that. Economics is a very hard taskmaster.
Bose is already very excited.
So wait a minute.
He's got a lot to
Therefore, if the rupee depreciates to sort of late 90s, that is fine. We need FDI to understand that. That's what we're very good at doing in India, going out there and telling FII or FDI, you want to make money here, there's going to be a 6% depreciation, hedges are expensive, so come in with your ROIs of in double digits and you'll make 4-5%. You're going to beat the global markets, you'll make 4-5% on top of the depreciation.
No, but with AI play, for example, they're potentially making much more, they think they're making much more in the immediate and medium term, in the US, in China, in Japan.
Just give me a couple of minutes. First, I think that Professor Roy is saying absolutely correct thing, that ultimately, and that is what the economic survey addressed, this issue. See, the point is not about whether it is depreciating in an orderly manner or not. The fact of the matter is it is depreciating because we have a persistent current account deficit. And it is that current account deficit which in the previous era, when Mr. Chidambaram was the finance minister, led to a situation when it went out of hand and it led to the taper tantrum situation, and when everybody says we are part of fragile 5 and so on. So once again, this is like the tip of the iceberg. You are having this persistent current account deficit. Where I disagree with Professor Roy is that you want the foreign investors to understand that. But I think we have been trying to explain that to the foreign investors for quite some time.
The foreign
The reason, the reason, Rahul, the reason, Rahul, I think we should take what Mr. Chidambaram said very seriously, is because what is happening to this budget and to this the macroeconomic performance of this government is that you are showing a growth rate, okay? That growth rate, as far as the common people are concerned, they don't look at 6.5, 7.5. They see whether their economic conditions are changing, mainly to employment. That's not happening. Foreign investors.
Before I have to wrap this up, and in this time, I want to focus just for a moment outside of the budget, but linked to the economy, at the massive volatility we've seen in the bullion markets. Over the last several months, Ratin Roy, we saw a massive historic appreciation in the prices of gold and silver. Many of our viewers watching would have wondered if they missed the bullion bull run, as it were, the epic bullion bull run, and then suddenly the markets crashed. Has that now settled in your view? What's your outlook on the bullion market, and what explains this historic rise and the cataclysmic fall?
Okay, very simple. The historic rise is easily explained. The world's in a bit of a mess. And stock markets are volatile across the world, not just here, right? Here they're just dead. I mean, now before the BJP starts eating up on me, I'm saying economy, not stock market, not economy. Okay, other places they've been extremely volatile. Bond markets have been skittish. The foreign exchange markets have not been making money. I mean, the risk has gone up all over the world. And then this ban has come as the president of the US. And he's every day saying something and people are getting jittery, don't know how to act. Fed is bad, this is bad. So in that market, it's happened at least 4 times this century. People flee into bullion. And they're fled into bullion, good. I think the bullion crash that's happened now is a correction because things appear to be getting more stable. I am personally not fully convinced that the Fed is okay. But the market seems to be, and that's fine. Now, the thing is, there is a risk which we'll have to manage, but I'm very confident the RBI has the equipment to manage it. Bullion, unfortunately, is also a kind of quasi-currency. So when you have volatility in the bullion markets, that can translate into short-term volatility in currencies. That can be managed. India is in a very fortunate position.
So is the dollar's hold as the currency of choice weakening substantially?
It is not weakening. It is becoming volatile in the sense that people are preferring, there have been sell-offs of US Treasury as well. People are preferring in the short run to hedge on the dollar. That doesn't mean the dollar is over. I mean, if some sense comes into the White House, the dollar is by no means over. It's a very powerful economy. But what the RBI will need to do, therefore, is use the weaponry and assets we have strategically to make sure that any such volatility doesn't spill over.
China, Russia, and maybe at some level, potentially India as well, which has spoken about trying to move away from a trade system
That's a work in progress.
which has the dollar at the core. We're already seeing India with Russia and elsewhere working towards that. Do these trends accentuate that, Harsh?
Unlike the 1970s, the gold this time is not an inflation hedge as much as it is a geopolitical hedge. So post 2022, when the Russian foreign exchange reserves were basically frozen by Europe and America, that risk premium of other central banks like India and China went up. That, we are working hard, our citizens are working hard, adding 10, 20, 50 billion dollars. It could, on a whim and a fancy, suddenly be frozen. In that context, while we can remain constructive on gold over a longer period of time, in the very short term, I'm slightly concerned if there is a Russia-Ukraine ceasefire or peace deal of any sorts, and one of the points of which is that some of the Russian foreign exchange reserves will be unfrozen, I think we could see possibly another leg of consolidation in the bullion market. Of course, within bullion, silver is much more volatile than gold. So it is a very complicated situation where it's more geopolitics than macroeconomics, unlike the 1970s.
And also the China is also dumping a lot of dollar reserves and holding gold. And the other countries are doing the same. So that creates a lot of demand for the gold. So which again could be one of the reasons why gold prices are escalating. Silver, again, the industry need of silvers is going up. So be it semiconductors, be it solar, car. If you suddenly the demand for silver goes up, again, that also causes a price increase. So there are some fundamental reasons also that has resulted in the volatility.
But I think the economy, to sum it up, the economy is in perfect shape to manage these crises. I have complete confidence in the RBI's technical capability to manage it if people don't do what they've done occasionally, which is interfere in their technical capability.
One very
Leave
short
them alone,
point.
they do a good job.
2013, when the taper tantrum happened, not at all a political point, the CAD was around 4 to 5% of GDP. Right now, CAD is 0.8% of GDP. So yes, a deficit is a deficit, but 0.8% is very different from 4%.
So we've had a fascinating conversation. We've been able to touch a lot of ground. Hopefully you've enjoyed this as well. We've heard from the likes of the topmost ministers in the government, the economists who put this budget together, and from the super sharp pundits who have joined us in the NDTV studios here in New Delhi. So thank you all very much for being a part of this conversation. It was fascinating and enriching at the same time, and hopefully for our viewers as well. We'll have a lot more in our continuing coverage. We have Shivarur coming up at 8. We have Padmaja Joshi at 9, Vishnu at 10. So stay tuned to NDTV's coverage of the budget and more. We return on the other side of a very quick break. Stay with us. Thank you very much. Thank you. Thank you.